Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. How about that? Can you hear me now? Okay, that's weird. For some reason, OBS did not have any of the audio. It said that, like, device not detected. Yeah, that's okay. All right, guys, welcome to, I've had some weird stuff with my, maybe it was because Windows Update. Must have been a Windows Update kind of changed things. That must be it. I also had this issue this morning. Actually, I'm still fixing it here, where all of my windows got moved to the wrong desktop. So I don't know what that's all about, but let's finish moving them back over to where they belong. Almost there. You and you. And also these two fellers. These two fellers. And ZB, move that back up. Okay. So now we fix all that. Welcome to March. Month T-0 as I'm calling it, because I gotta get a job at the end of the month. So let's go to the charts. Talk about what's been happening, because we do have fairly interesting setup today. Okay, so first, the treasuries. Zoom in here a little bit. A little bit of buying going into the end of the month, it seems. But we are a tiny bit lower this morning and pretty calm in the overnight. This is the calmest that the treasuries have been for a while. S&P 500. Okay, well, they started out the day pretty meh. I mean, it was a little bit of a sell, but then there was a pretty strong bid going into the close. And what I'm getting from the reports that I'm reading out there is that there was actually quite a bit of stocks to buy for like monthly rebalancing and so forth. And that the CTAs baited it. So the CTAs sold into it, but the end of month flows won out, and that's why you kind of got this super strong move going up into the close. So that kind of sets us up, I think, for an interesting situation this morning, because probably you're likely to get some short covering today. You're pretty likely to get some short covering today, but we still have some macro developments going on out there. I guess we'll talk about those after we look at the charts, okay? Oil here, just kind of middling around still. Gold and silver, trying to recover from a couple of pretty bad days, especially there in silver. Silver is still just kind of doing its thing, although there is some pretty decent volatility along there. Remember, this day was when the Trump administration talked about tariffs for protecting copper. And then we got the Japanese yen fading just a tad. I don't know if that's just some strength from the dollar, but this morning we're seeing a relatively strong move down in the dollar. And then we got Bitcoin. Oh, Bitcoin. So over the weekend, Donald Trump tweeting about a crypto conference super day. I don't know what they're calling it. But there's going to be some sort of an event this week. He was talking about the cryptocurrency reserve and like all of the cryptocurrencies he's going to put in it. He named like all of the big major cryptocurrencies. And so Bitcoin panic bid all the way back up to the 9,500-ish area. So this is kind of curious. It kind of gives you an idea of how it's going to go in Bitcoin. Like, I don't really want to have anything to do with it, but I suspect that if you're long for the long term in Bitcoin, that you're probably going to make some money. And anytime that it gets down too much, they're probably going to come out and do something to pump it up. Because I think that somebody was getting a little bit nervous. Now, the thing that's funny about this move is that he didn't really, he just referenced the order that he had made earlier. And all that order does is instruct them to investigate creating a crypto reserve. So, what's that about? Why are we moving on that? I don't know, because it's crypto. I do kind of wonder, like, what are all of the legal ramifications of this? Because can the president really just unilaterally come in and create a cryptocurrency reserve and then start buying cryptocurrencies? Doesn't Congress have to like allocate money for such a thing? But I've done a bunch of research on this question, and doesn't seem like anybody really actually knows. Probably because the administration hasn't really said a whole lot about how they would do it. So, like what authority they might be using or what the deal is, right? And that's probably part of what the, investigating, creating a reserve is probably a major part of what that is about, right? So, because you saw the big rise in cryptocurrencies over the weekend, that's probably going to have a little bit of an effect in the market too. And that I think will kind of help the short covering that we might see in equities today. Okay. The split side of that is that apparently we're still going to get tariffs on Canada and Mexico. And it seems to me that the market is now to the negotiating part of this because, like in the stages of grief, because now the question is, what is the actual tariff going to be? Because I think that the market is expecting 25%. And so like if it's less than that, then it'll be a good thing. So, like that's kind of where we're at right now with that. So there's also the Ukraine thing. Well, wait, should we talk about the Ukraine thing? Oh, no, real quickly. There is tensions rising in Gaza again, like apparently the ceasefire is over. So that's a thing. I don't know. When we were looking at oil here again, I guess there's a little bit of a bit, but it's unclear to me if oil is reacting to that. Okay. And then there's the Ukraine thing. So what's with the Ukraine thing? On Friday, Zelensky was in town to quote unquote sign the deal, I guess. Oh, quick question here. Are you trading spreads? Not really. I kind of want to, but I don't regularly trade them. I kind of have some strategies that I want to try on a higher time frame though. Anyways, I digress. So Zelensky came to the White House to talk about this mineral deal that they're going to sign. And during the conference, during the press conference that they had, things just kind of went south. Like it just went really bad. It's really bizarre to me to watch the internet react to this. The thing that I thought was so weird, I come out and conservative media is just posting the clips that JD Vance mostly and of Donald Trump getting really upset, and not really showing any kind of context or anything, which I thought was kind of weird. It was like, okay, the conservatives don't want us to see the context, but really nobody was showing us the context. So I went and I watched the whole press conference to try and figure out what was going on here. And here's what I saw. What I saw was Zelensky. Well, Trump just wants to say, hey, we're making a deal and make a big press, about the deal. Hold on a second. Wait, come on. There we go. And a big sticking point on all of this is like security guarantees for Ukraine and things like that. And the U.S. administration does not think that security guarantees are possible. I think that they're probably right. It seems to me that if you gave Ukraine a quote unquote security guarantee, that Russia would consider that an act of war. So I'm not sure that you can really play with that one. But like that's the thing that they're kind of like disagree about. And the whole press conference, Zelensky was like kind of like undermining everything that Trump and Vance were saying. And it got to a point where, Vance, he answered one question about the security guarantees thing. And then Zelensky was like, let me ask you a question. I forget what the exact words that he said, but it was basically like that. And then he made an argument to Vance. And that was the point at which Vance started to turn into like, you're so ungrateful, yada, yada, yada. Right. So I think that Zelensky was really egging him on. And in fact, we've gotten reports since then that Zelensky met with a bunch of Democrats before that meeting. The Democrats and the Europeans were all kind of instructing him to like blow up the deal. I've seen the Democrats have been pulling this tactic on Trump a lot lately. They did it when it was, with Kamala Harris during the debates. Do you guys remember that? Where they were like, okay, we are going to have an agreement to have a debate. And then like at the last, after they've said something and everybody's like, oh yeah, we do have a deal. And then like they tried to change the terms of the deal at the last second and hope that Donald Trump, wants to be able to say that they made a deal so badly that he just goes along with it. But whenever they pull that, he doesn't do it. And then they try and make him look bad for not doing the deal. But then like nobody cares and forgets about it. So I kind of think that that's what's going on there. So I think that the market could be sensitive today to headlines surrounding Ukraine. And what I expect to happen is I'm pretty confident that they will end up getting a deal. Like Zelensky will come back and grovel hard enough and get a deal or something like that. There is, though, a competing deal sort of a thing going on in Europe. And the things that people are saying in Europe kind of like suggest to me that they do want to turn it into a wider war, that like some of the Europeans are getting to the point where they're willing to put boots on the ground. So that's kind of the place that I think that the U.S. administration is coming from, is that the window for Ukraine to have taken that territory back on their own has probably closed. Russia is entrenched too deep now. And in fact, it's kind of like a slow war of attrition where Russia just very, very slowly gains teeny, teeny, tiny little bits of land. But meanwhile, it's just like everybody's dying. Everybody's dying. So at that point, what is the point of keeping the war going? Because you're not going to get a better negotiating position in the future if Russia just continues to push forward. So the only way that you can really change that is if you start to put NATO boots on the ground. I really don't think that Ukraine has the manpower to push the Ukrainians back. It's not an issue of money at this point, right? The day that happens, European nation will no longer exist. Who knows? But the way the UK was talking what let me find the Zero Hedge had an article, so I wouldn't expect them to be amid a historic bloodbath, panicking hedge funds unleashed second biggest shorting spree since COVID. Okay. Besant shocked by scale of fraud already uncovered by Doge, mocks mainstream Biden vibe session narrative. And I have to read that too. Where was the here we go. The UK Prime Minister said his coalition will intensify planning now with real urgency and reiterated that the UK is prepared to back this with boots on the ground and planes in the air. So, I don't know. Okay, yeah, I see where you're going, AO though, which is like the UK talks a big game, but the truth of the matter is they really haven't put up, have they? The United States has put up the majority of the funding. I think even with like Republicans kind of balking at funding Ukraine and everything, the Europeans have kind of been like, if we just drag our feet enough, the US will step up and pay for it. It really seems like that's been their kind of like strategy overall. Because they have not contributed nearly enough relative to like how big of a deal they make it out to be. You know what I mean? So there's all of this after the Zelensky meeting, because Trump's whole thing was like, listen, you don't hold any cards here. Like, the US holds all of the cards. You kind of have to do what we tell you to, because you don't have the power to do anything on your own, right? And so then all these people are like, well, maybe us in Europe will just go it on your own. You can't. They don't have the money or the military power to do it. They need the US to do it. Why would Zelensky come back? He got full support of nearly all of Europe. Russia is going broke fighting this war. Well, that is true that Russia is starting to feel significant negative economic impacts from the war. They survived for a while on, all of the tricks that government has available to them, but it has now been long enough that is no longer good enough, and they are really starting to hurt. I kind of don't think, though, like one thought is, okay, so if you just kind of keep things going, keep the stalemate going long enough, that Russia will eventually relent, I think is kind of the idea. Do you think that Ukraine would be in a better position to negotiate if we kept the stalemate, we continued spending money, and then negotiated a year from now? That sounds like a reasonable argument to me. I don't know enough about the situation to know if that's a good idea or not. I only know that that's not the Trump administration's position. The Trump administration's position is that this is all kind of pointless and that we should negotiate a ceasefire. Now, I think that part of the Trump administration's feelings on this may also have to do with the how do I put this in the most correct and politically sensitive terms? The history of the oblasts that are in question here is kind of complicated. And there is a good argument to make that those people don't actually want to be part of Ukraine. And that's why Russia is kind of stepping in. Granted, Russia kind of like engineered that, you know? But I think they're kind of saying, you know what, Russia actually does have some reasonable reasons to want to be involved there. It's not completely crazy. And you know what, I do kind of feel like that to some extent. Like, I understand, given, you gotta understand that they've got like this crazy ultra-nationalist ideology in power over there in Russia that really thinks that they have to control all of these different areas in order for Russia to ever be safe. And so they're going all in on that. It doesn't excuse what they did. I mean, I think that it's just absolutely inappropriate. We cannot allow countries to do these sorts of things without being punished. But the problem is, it happened. It was kind of predictable, so I do kind of feel that the West was kind of playing with fire a little bit there, and Russia decided to call the bluff, and now, like, it's happened, and what are you going to do about it, you know? Because, like, really, I just do not see how Ukraine takes that territory back without help from Western governments and beyond just money. You know? I told you when this whole thing started that the West wants the lithium under Ukraine. That it could be. I mean, the problem that we have is we don't really have the information to know to what extent that is true. Right? It seems to me like that the Trump administration is much more explicit about, we want these minerals and we want these minerals, you know? Maybe past presidential administrations were thinking about those sorts of things, but it was always hush hush, you don't talk about it, right? Trump definitely wants the minerals, and the minerals are in these areas under dispute. So, I don't know. But I think that in the short term, I think that we have enough information to predict how this is going to go in the short term really well. I think that the EU is going to continue to talk a big game and not really have enough to do anything meaningful. And before the week is over, Zelensky will come crawling back, kiss the ring, and they'll sign the deal. He was already saying, "Oh, I want to sign the deal." I think that you're going to have to be a little bit more reconciliatory than that, like maybe a public apology before they let you come back. But we'll see. I think that they will sign the deal, and we'll move on to the next phase of this, which is like trying to negotiate some sort of a longer term peace deal. And it probably won't include an explicit like security guarantee per se, but it will set things up that Russia will not want to take further territory because they know if they do, it will start World War III. That's where I think this is going to go. Ukraine wants a good deal with the USA, but also Russia wants what? Russia wants the territory. Yeah, and that's the second thing, is that they do a peace deal, and probably will be the case that Ukraine will give up territory. Either that Ukraine will give up territory, or that there will be like neutral zone territory or like autonomous regions. But I don't think that territory is going to remain under Ukraine's control. I mean, how else are you going to make it happen? You appear to be living. So what about, what I really hate is when you come in and you make an argument and you like say some general thing but you don't actually make an argument, right? So if you want to make an argument and say, okay, which of the things that I said was incorrect and why, right? You think that Ukraine can take that territory back? They just need more money? Because I just don't believe that's true. Russia can already rely on China for rare earth mineral deals. It complicates it for us. Ukraine is the only option. Well, I mean, but there's also... I don't know if that's true. That what is a delusion that the Russian economy is suffering? Are China and Russia allies? I mean, kind of. AO says U.S. companies will be in Russia by the end of the year. That would be great. Okay. That would be wild if that happened, but I suppose it's a possibility. But that's a little bit further out than I think that my prescient abilities go. I only think that it's extremely likely that Zelensky comes back and they sign the mineral deal. And I don't know what this whole thing about the UK Prime Minister talking about intensify planning now and we'll back this with boots on the ground. I'm guessing that that's probably going to be something that like everybody just forgets was said. Coca-Cola wants to come hang on. That's funny. Treasury's been pretty calm so far, but I would say it's typical for a Monday with maybe a slight bit of buy-side bias, but not really seeing it in the flow, so... The U.S. isn't going to make rare earth mineral deals with China. As such, a staunch competitor, China is busy leveraging Africa to the hilt, and it's not only because they're humanitarians. Russia and China have mad access to rare earth minerals. Yeah. Well, I do think that we in the Western world do have enough rare earth minerals to, fill our needs. But the regulations and everything prevent us from mining them. This is why, again, this stock that I own, REEMF, rare earth mineral. I can't even remember the whole name of it now. But they are pioneering a new process to get the minerals that is more environmentally safe. And that could change things big time if they're successful. And they already have a demo plant, and it sounds like they have a process that works, so... Okay, Neat Man, just found your page. The other day, is order flow through the DOM your main strategy, or do you combine it with something else like support and resistance or supply and demand? Well, I do combine it with something else, but definitely not support, resistance, supply, and demand. So I think that the key thing to understand is that the primary edge that I am utilizing is, I guess you could call it fundamentals. I don't really, I don't like to use the word fundamentals because that might be deceptive about what it is that I'm actually looking at. But I'm looking at like news and all of these sorts of things. I have larger predictions about what's going to drive the flows that day based on what's going on in the market. Information that you cannot see on a chart, essentially. And so I kind of have a method wherein I look at all of the different things that could lead to flows that day and combine them all together to determine if there's going to be an imbalance or not that day. And then if I am expecting an imbalance, then I'm over here on the DOM looking for signs of that imbalance. And that's basically how I do it. So there's this broader thing, which is that the past market generated data is not very good at predicting the future market generated data on an intraday basis. So there is definitely things in the order flow that are like proven aberrations different from like a purely random market, and they can help you, but those things on their own are unlikely to make you profitable or to make it worth your while, because it's competitive and other people are doing those things. So even though those edges will kind of always be around, you might not necessarily be the one that makes money from it, right? So we have to have something a little bit higher to work with, and that's where I like to call it informational asymmetry. There's something we know that the market isn't correctly pricing in yet. And we know something that causes us to expect that the market will start to price it in very soon. And that's the primary way that I trade. So some of these other things, like especially when it comes to price, pretty much anything that you are seeing on the chart in regards to price is not predictive. There are like quote unquote patterns, but those are results. Like once you see the pattern, the trade is over. We're not going to brutalize U.S. land for rare earth minerals. It'd be a political minefield. We already hamburger our own asses over oil and gas. Oh, I don't know about that. You come over to Utah and look at the big chasms that we've dug over here and tell me that they're not willing to do that elsewhere. Especially if it came down to like the competitiveness of the United States overall is at risk unless we do it. Okay, so you think that Trump chirped that he could end the war. He failed, and to use his words, he failed bigly. And Zelensky moved on him like a bitch and owned him in the Oval Office. Well, it sure seems to me like Zelensky was kind of like trying to undermine the deal, and that he never had any intention of signing it. That does seem true to me. But I'm going to bet that they sign it before the end of the week. Very, very high probability that they sign it before the end of the week. And if they don't, then I think that the next thing would be for the United States to just end all support for Ukraine. Okay. European Union wants to put boots on the grounds for it. Go on and do it without us. That's probably where that would lead. Yeah, if you think that Europe is going to step up for Ukraine with boots and planes, you're delusional. Zelensky is going to go back to the table. Europeans can't afford it. I think you're probably right. That's why I think that it's a very, very high probability that Zelensky is going to come back. They just need enough of a media frenzy for a few days so that the Democrats feel like that they're accomplishing something with it and that their strategy somehow weakened the Trump administration. And then he's going to come back and he's going to sign the deal because they really don't have any other choice. Is it going to be awkward when they meet? Yeah. Well, maybe next time when they meet, Zelensky will just keep his mouth shut. If I was in his ambassador, I would say, okay, just say the nice things and what they want you to say, and don't say anything more than you have to. And yeah, Europe isn't going to dive in worth a shit. I mean, it's kind of a difficult thing, like when I'm trying to analyze that, you know? and I come out with a why do I think what's going to happen is going to happen, because I'm not some sort of geopolitical insider or anything like that. All I know is that what has happened in the past and what Europe has done in the recent past, and what I see in the recent past is Europe talks a big game, but then they don't put up. I hope he shows up in a suit next time. That would be hilarious. I can't think of anything that would, like, you know, in terms of like narrative and things like that, that would help the Trump administration more than Zelensky showing up in a suit. Yeah. And then, and if they do sign the deal, then what will the left say? Well, the issue is that mineral deal is only like, well, one very limited part of trying to get a broader deal. And that broader deal is probably a lot tougher to get, because Russia is going to say, we're going to keep the territory that we've gotten. And Ukraine is going to say that's unacceptable. Which really it is unacceptable, but I just really don't feel that we have any negotiating power there. I am curious why the US would give security guarantees for the rare earth minerals deal. Well, I think two reasons. One, it seems to me that they think that they don't have to give an explicit guarantee, like sign a treaty if Russia attacks, well, we'll attack Russia, sort of a thing, because they know that if US companies are there helping Ukraine mine the rare earth minerals, Russia would have to be stupid to go in and attack the US companies. So that's the first thing. And then the second thing is that Russia has said that if we give Ukraine explicit security guarantees like that, that Russia would consider it an act of war. You know, listening to you go on about Donald Trump right now kind of reminds me of a story that my dad likes to tell way too often. So, once upon a time, the way back, not once upon a time. So this is back at like the turn of the century, and there's a rich businessman on a train. And back then, you know, like there were like serious luxury cars, you know. So this rich man, he's having like a 7-course meal, everything. And the waiter is like, is there, you know, how did you enjoy your meal? Is there anything else that I can get you? And he said, you know, like absolutely everything about this has been the absolute best service possibly could have gotten. This is the best food I've ever had. But there's one more thing that I would like you to do for me. I would really like some blueberry pie. So they go and they ask the chef, and the chef says, well, we don't have any blueberries on this train. So that's kind of a problem. So they go back and they inform the businessman, well, we are out of blueberries, I'm sorry. And the businessman just absolutely blows up. He's like, you have any idea how much money I've put into this railroad and the investments that we've made and how, you know, I can really make this railroad's life hell if I wanted to. And I think you better get me some blueberry pie. So what happens is the train stops in the nearest town. Kid goes out into the town, buys some blueberries, brings it back. They make blueberry pie and they bring it to the businessman. They bend over backwards for him and they make the blueberry pie. And they give the man the blueberry pie and he says, thank you, but I think I'd rather just be mad at the railroad. I see a lot of comments on the internet that is like, we're not trying to solve anything. We're not trying to understand the geopolitical situation so that we can make our own decisions and figure out what is the best thing for me to do in this situation or how it might apply to me or anything like that. No, they just want to be mad at the railroad. And I'm not really interested in that. I know that there are a lot of creators where you go there and if you want to have a Trump rage session, you can do that. But that's not this stream, right? So like, there's nothing like a multiple draft dodge lecturing an honorable man at war trying to save his country. Okay, cool. But how does that help us predict what's going to happen or anything like that? It doesn't. Doesn't. Tell me something that's useful to us. So I think that they will sign a mineral deal before the end of the week. That's what I think is going to happen. Do you have information or logic that suggests that it won't go that way? Otherwise, I'm not sure if it's relevant. Treasury's coming back to the seller cost basis, by the way. And a slight bit of imbalance in favor of sellers. Okay, well, I'll wait. Maybe you have another response there, but I am going to read this story. From a flow perspective, the Goldman trader notes that hedge fund activity on the desk slowed compared to last week, while asset manager trading picked up. As for hedge funds, it was a historic bloodbath, and feeling they had nothing to lose, panicking hedge funds unleashed a bearish momentum scramble for the ages, one which is about to reverse with a vengeance and lead to even more hedge fund losses. This is where I'm talking about. I think that stocks are probably primed for some short covering. US stocks were sold in four of the past 5 sessions and saw the largest net selling in more than a year, driven by short sales outpacing long buys nearly 7-1. Said otherwise, last week's shorting of U.S. stocks was the second largest in the past 5 years, on par with what we saw in September of 2022, which marked the end of the bear market and ranks in the 100th percentile. Oh, right. We're calling that move in 2022 the bear market. Okay, gotcha. Do you think that tariffs will hurt the economy? So that's difficult to say, actually. So generally speaking, tariffs do hurt the economy. Generally speaking. The problem is that the economy is a dynamic system, and there's a lot of different things going on. And so even though you can say that, like, generally speaking, tariffs are a negative for the economy, does not necessarily mean that it's going to be bad for the economy, and especially bad for the market this particular time. Right? And so from our perspective as traders, I think what you have to look at is that it's going to be very, very complicated, and the reactions are going to be on a day-by-day basis. So you go back to the first time in Trump's first term when there was basically a trade war with China. Like, there was a lot of market volatility, but there was not really any lasting damage done. When it started to come close to the election, Trump administration said, well, we need to shelve this for now, and all of those tariffs that were in place just stayed in place and everybody forgot about it. And we moved on and it wasn't the end of the world, right? So be very, very careful when people tell you like, oh, tariffs, that's like the end of the world. It's more complicated than that. And our ability to predict how that's actually going to be super far in advance is very hard. See, what people think of it is like there's some equilibrium and we change this variable and then the system is going to move to that equilibrium point and then that's the economy weaker and so that means that the economy is going to go down. But that's not actually how any of this works. The market is a dynamic system with multiple variables and you change them and it's kind of more, it's a chaotic system that's constantly moving around. One that is difficult to predict, but there are some situations where you kind of know where it's going and then you can kind of predict that bit of it, right? So one thing that we got going on right now is that the Trump administration has said that tariffs against Canada and Mexico are still set to go into effect at the beginning of this month. But we don't know what the actual percentage number is going to be. So I think that the market is expecting 25%. So like if they come out and it's like, actually, it's going to be 20%. And then you'll see the market rally on tariffs. Like, you know, it would be kind of funny, but that's one major possibility, right? Do you believe in international laws? I mean, what does that mean? I'm not quite sure I understand what that means if you say that you believe in international laws. Does that mean that you believe that we should have international laws and that they are good? Or does it mean that you believe in the supposed international laws that we already have in place? Because I think that you could say, okay, let's just, for the sake of argument, say, sure, we believe in international laws and the ones that are in place. And then you would come in and you would say, well, yeah, but Russia broke international law. Okay, maybe they did. What are you going to do about it? Let me ask you a question. Do you want to commit U.S. troops on the ground fighting and dying in a conflict in Ukraine? I don't think that anybody in the United States does. That seems like a political loser to me. Do you think that Putin and Russia should? Sure, in an ideal world, they should be. Yeah, see, I predicted where his argument was going to go almost to a T, didn't I? Okay, so let's say, for the sake of argument, that Putin and Russia broke international laws and that we feel that they should be held accountable for their crimes against humanity. Okay. How are you going to enforce that? How far are you willing to go to ensure that Russia and Putin pay the price for the crimes that they've committed? Kind of noting there was a little bit of a liquidity hole here at 30 when we were here last time, and getting some signs of seeing that again. So we're still looks like we're in a quiet Monday market with perhaps a little bit of an imbalance in favor of the sellers. Yeah, I mean, it seems to me like illegal immigrant probably does believe that Putin in Russia should be held accountable for his crimes against humanity, right? Like I'm trying to read into his. I'm not a mind reader, but I think if I was a mind reader, what I would probably be hearing is he thinks that they've committed a crime and that they should be held accountable, and that any reasonable person would agree with him. So that's not like a key point in my thinking of things, but I think that it's a reasonable argument that they've committed a crime and that they should be held accountable for it. Okay, but then it comes to where the rubber meets the road. How do you hold them accountable? How far are you willing to go? Because it's not like we can just say, go to their house. Oh, we have a warrant for Putin's arrest. We're going to arrest you and try you in internet. It doesn't work like that, does it? No. It's a country. Putin has lots of power. To hold Putin accountable, you would basically have to invade Moscow. I mean, you're not really insinuating that we should be invading Moscow right now, are you? They should be held accountable, but Trump feels they should be rewarded with a chunk of Ukraine. Yeah, well, because Donald Trump doesn't think that holding them doesn't necessarily that he doesn't think that they should be held accountable. It's that he thinks that it's not worth it to, that the costs that you would have to pay to hold them accountable isn't worth it. Which honestly was probably the calculation that Putin was making when he invaded. But he's probably right. Yeah, he says, yes, they should be held accountable. Okay, so if yes, how? No. You're changing the subject. Answer the question. If Russia needs to be held accountable, how are you going to do it? Like the funny thing here is that Ukraine wasn't supposed to last this long, right? The West thought that they would put up a good fight, but that Russia would move in, and then the West could support some sort of counterinsurgency and turn it into like Afghanistan. That's really what I think what the West thought was going to happen, right? And then they won, and they got this quagmire, and they don't know what to do with it because they didn't expect that to happen. Changing the subject instead of answering the question is a specialty. Why answer questions? Well, when people change the subject like that, it's a strong indication that they are feeling cognitive dissonance, right? There's something about the question that makes them feel uncomfortable, and so they want to outright change the subject. Now, one reason that people might feel uncomfortable is because they're afraid that you are leading them into a trap, right? Okay, so you have a set of questions, and then you're going to answer those questions, and they're going to say, well, right? And so I think most people are kind of smart enough to see that that's happening, and they're kind of careful about what they say, right? But when you just like completely change the subject, right? It's a sign that you're experiencing the cognitive dissonance, right? Because he probably is thinking they're like, well, yeah, they should, because I agree. Like, I think it's really bad for the international order for a country to invade another sovereign country and get away with it. It's really, really bad for the international order. But the problem is Russia is a nuclear power. So there's really only so much we can do about that. Zelensky never asked for troops. I mean, I don't know if that's exactly true. I don't think that he's ever explicitly asked for troops, but it seems to me that this whole time that Zelensky has been trying to ensnare the broader and Western world into the conflict. But that's not really an answer to the question. Okay, you said that Zelensky never asked for troops, but the question was, how are you going to hold Russia accountable, right? So is the way that it sounds like you're saying the way that we hold Russia accountable is by continuing to spend billions of dollars on a stalemate conflict in the hopes that eventually it leads to the Russia regime's collapse. Right? Because I really don't think that like Russia's hurting economically, that's true. But I don't think that you can collapse the regime that way. Okay, so Russia should be booted out of Ukraine and Putin assassinated. Okay, but how are you going to do that? Hey Seth, how do you think cumulative delta is useful to understand and detect trends when there's a huge sign between price and cumulative delta, meaning not divergence only? I think what you mean to say is that when price and cumulative delta are correlated, right? Yes. When price and cumulative delta are diverging, are anti-correlated, the correlation is -1, don't trade that. That's a losing trade. But when they are highly correlated and cumulative delta, the changing cumulative delta is very consistent, that's when you get the best trends. Cumulative delta is also useful. So I think that the next video, I'm a little behind on videos. I did finish writing the next one, which was just like which asset class should you trade, kind of like a beginner video to go along with the video that we had about how big of an account that you need. So I'm going to record that one tomorrow, I think, and I don't know if we'll put it out midweek or if we'll put it out next week. And then the week after that, we will have a video about cumulative delta. And I will make like the ultimate, most detailed guide about cumulative delta that we can possibly have, including like going into details about the algorithm and how it works and the data and how that works. To explain some of the discrepancies that you'll see in cumulative delta between machines. And then, all of this stuff about it being highly correlated and using it for targets. So that'll be the video that we put out on the 17th, I think. And then on the 24th, well, I'm not sure, but what I would like to have is the video on agent-based modeling and kind of the revolution that we're seeing in the economic science of it all. Okay, given the incompetence now leading our military, we'll probably be powerless to take out Putin, despite the fact that our defense budget is twice that of the world combined. Whoa, wait. So are you then admitting that what you would like to see happen is the United States to get directly involved in the conflict? Because see, that's the point that we're trying to make here. Is that there's nothing you can do about it unless you're willing to commit troops to it. unless you want to start World War III, you can't do anything about it. Because like the thing that I see is like, I thought that, you know, continuing to put money into the conflict and like we can last longer than Russia on this. And eventually you do isolate Russia to where they kind of have to come back to the table. I mean, we are kind of just on the cusp of Russia's economy really like falling apart. But I don't think that you're gonna see a collapse in their economy to the extent that the regime collapses or anything like that. Why have a military if we aren't prepared? Okay. That's all we wanted. That's all we wanted, man, was we just want you to admit that you're willing to start World War III to hold Putin accountable. That's what you're saying. I think that's when there's a negative correlation between those two. Doesn't that mean that in that moment, passive players cause that? So I wouldn't phrase it that way, but yes. Generally speaking, if the market orders didn't win, then it has to have been the passive players. But the reason why I say I wouldn't phrase it that way is, okay, but did you actually see like a strong move? Like what's more often the case is price moved and cumulative delta stayed the same or roughly the same, right? That happens a lot. The case where cumulative delta and price are like, and you know, go exact opposite directions, at least in the treasuries and most hard commodities, very rare. In the S&P 500, that can happen more frequently. But that's because there's so many different flows in the S&P 500 that are driving it and hedging and stuff like that. So yeah, when it's not the orders that are making it move, that's not the best action for us. So World War III is the answer. Yeah, and see, but you know what, guys? I don't think that that's what the Democrat Party wants. I don't think that that's like what the Democrat Party in Europe wants. I think that what they want is for the U.S. to just continue to spend money on this in perpetuity, and for this conflict to turn into like the Korean War, but like more expensive. I think that's what they want. And they have kind of riled up their base, and their base does kind of think that we should just go in. Or some people think that we should just go in, but that's not going to happen. Like, you know that that's not actually going to happen, right? So like now that we've established that you do want troops on the ground there, do you think that would happen? If Joe Biden was president, do you think that would have any remote possibility of happening? Because I don't. I don't think that the U.S. public has the appetite for that. Not even close. And in fact, I'm starting to see some signs, because I remember this whole thing that like the United States public as a whole really strongly supports Ukraine. It does. But I'm starting to see signs that while the public supports Ukraine, they really don't want to keep paying for this. And that, you know, I was always concerned that the Ukraine issue could prevent Donald Trump from being president, that was like the key issue that was going to prevent him from becoming president again, right? But now I'm kind of thinking the opposite. Maybe there was a sizable portion of people that voted for him explicitly because they wanted the de-escalation in the Ukraine war. We support Ukraine, but we want de-escalation. So, talking about cumulative delta. Fortunately, my numbers are all screwed up. We can try reloading the data here in a second, but there is a slight 10K or so bias to the downside. But you can see that like we've been selling through here and it hasn't necessarily resulted in lower price. So this is a situation where I don't really feel like we're getting really strong movement in cumulative delta, and the treasuries are just kind of floating around like market making games. So that's not good action for us to take a trade. Let's come and reload all historical data and see if that fixes our data problem. Oh, that made it worse. It did the same thing that it did the other day. You see that? Where like there's one data point that's just like absolutely like basically when I opened up the data. And then this whole time period here where I had it open is now not recorded correctly. Didn't print out anything, did it? Nope. That's super annoying. And it's been doing this like every day too. Yeah, petition for an American war and see how many signatures you get. I'd volunteer to join. You can do that already, yeah. I don't think that anybody would actually do it. I mean, it's practically a death sentence. I mean, I understand that there are some unique things about the way that the warfare is being fought there because, you know, Russia's military is kind of an old military and you know, they're just kind of like on a shoestring budget, both sides. But if like a full scale conflict is anything like the Ukraine war, count me out. Count me out. You know, like you hear the horror stories of World War I. World War I was really horrific. I mean, not that World War II wasn't horrific, but World War II was like fundamentally different, and the grindy nature of World War I was particularly brutal. And it concerns me that it kind of feels like warfare is going in that direction again, where you're very much like holding positions and you're just stuck in a death trap where you're sitting there and just waiting for a drone to come along and bomb you. Sorry, why don't you answer the question? Which question? I'd volunteer. Let's see here. So before that, he said I'd volunteer to join the military. And then before that, why have military might if we aren't prepared to use it? Or is Trump too chicken shit to do it? I did answer the question. The American public does not have appetite for declaring war on Russia. And more broadly, I don't have the appetite for declaring a war on Russia. Right? That's the reality of geopolitics. We can come in and we can say, yes, Russia did something wrong. Yes, they should pay for it. But I do not have the appetite for what it would take to force that and make them pay for it. Okay, if we appease Putin, won't he invade again after he rebuilds his military? That's a good question. So I think that we should certainly be concerned about it. I actually kind of think that well, okay, so why would he invade again? Russia believes that in order for them to have real security, that they have to control all of the major land connections into the heart of Russia, which basically means that they have to control Ukraine and Poland. Like they want it to be like I don't know, map here. Like, I think ideally they want to control Poland because that's kind of like the flat land around the Alps, right? So they want this whole thing. So there are crazy elements in Russia that absolutely do want to push the Russian military to basically take like all of this. They want to control that too, because that's the other big, inlet, right? They don't want it to come in here. They don't want it to come in here, and they don't want it to come in here. And these are like the major gateways that they're trying to control, right? And see, when right now it's basically like this, right? They don't like that. So that's like, right? That's where Russia's coming from, largely. Now, there's this other side of it, which is, oh, but there's actually Russians in these areas. These areas, they don't actually want to be part of Ukraine. So we're going to let them break off. Okay. Well, if that was really true, and that's all it was about, and we took Russia at face value, then we should be able to give those areas to Russia, and then it should be the end of it, right? Probably not. But I really don't think that if we got a deal, Russia would have to be absolutely nuts to then try again. So, one, because we will have a situation that will be, much more, like the West will have even more at stake. Okay. So you have a situation where if they did decide to go and like make a move on Kiev, then at that point, the West would be way more likely to get involved second time around. Right. But then the other thing is like, would Russia even have the resources to do it again? I kind of feel that Russia is screwed either way. You know what I mean? Like, can Russia actually like build up and then try again in 10 years or so? I don't think so. I honestly, I don't think that they can. I think that at that point, Russia will be facing so many demographic issues and everything else like that that like you're gonna see like a huge political change in Russia, anyways. So the answer is, well, I do think that we should be concerned about it, and that Russia wants to invade all of Ukraine, and maybe they'll just take a piece. I think that the chances of them actually doing it later are pretty low. Oops. You know what? You know what just happened there was my wife got in the car. So we need to turn my Bluetooth off. And we need to tell it to come back over here, this computer. There we go. Can't believe that my Bluetooth can connect that far away. I wish there was an easier way to tell it when to connect and when not to connect to my car. Because just any time that the car turns on is not working very good. You know, the funny thing is that this strange data aberration that I get in NinjaTrader doesn't show up. The one that I got on Friday doesn't show up anymore. I wonder if I close NinjaTrader and restart it, if it's still there. I'm going to try that. Abel says that's hilarious that that's really his only argument. So if he is really representative of the larger left and Europe and everything, that is kind of concerning, isn't it? But I don't think that he actually is. That's why I think that things are kind of playing out the way that they are, because I don't think that the United States really has the appetite for this, and like Americans are kind of getting sick of paying for it. That's why it's going the way that it is. Right, because remember, this is really about trying to be able to predict what's going to happen and what we might want to do as traders and so forth in response. Traders, not traitors. Traders. So trying to predict the future and ergo how financial markets might respond. Do I see it over here? Oh, you know what? I didn't even turn on the robot. Not that it would have gotten into anything, but let's turn on the robot. See, it's maybe it has something to do with this particular chart or something, because this one over here isn't doing that. They are stepping up to the plate there in the treasuries. So what happens to the mineral deal then if what you're saying plays out? I think that by the end of the week that they'll sign it. Zelensky will kiss the ring, and there'll probably be like a lot of hand wringing and gnashing of teeth and everything in the meantime. But I think that before all is said and done, and if not this week, then next week, that they will sign the mineral deal at the very least. I don't know. On some hand, with the illegal immigrant, I kind of feel bad a little bit because I don't think that he comes here just to argue politics, but yeah, that's where we're at. That's the market that we have today. I was just finishing reading this Zero Hedge story, and they're kind of suggesting that they think that the bottom is already in. I'm a little bit skeptical about that. I think that we might see a short-term bottom, but that you're probably going to continue to see volatility in markets for several months. But if our border to the Ukraine-Russia war was in the same proximity as Europe's, I bet we wouldn't be so eager to have our president bend the knee to Putin. Yeah, well, but if that was the case, I think that the U.S. would have had stronger deterrence and Russia would have never have invaded in the first place, right? So that's probably not a very good... I mean, I think that the whole attitude here is kind of funny. That everybody attacks Donald Trump for being some sort of warmongering, ultra-nationalist dictator. And then when he doesn't want to do dictator things, when he doesn't want to start new wars, they attack him for being a pussy because he isn't starting the war. Like, what? That's why I said earlier, I think that some people just want to be mad at the railroad. It's not their guy in there, so they're upset either way. I mean, honestly, let's say that it wasn't Donald Trump, okay? Let's say that in some bizarro world where Donald Trump never ran for president and the Republican president is Jeb Bush, okay? And the Ukraine war still happened, and it happened under Jeb Bush. And Jeb Bush was the one that was pushing, we need to give Ukraine as much attention as we can. I think that it would be exactly the mirror. It would be the exact mirror that we see today. Republicans would be all pro-Ukraine, and Democrats would be trying to point out how there's so much corruption in Ukraine, and maybe Russia has a good point. And how many months or years does it take you to learn coding and programming to improve your skills for trading activities such as creating robots? Well, so I mean, I have years and years of experience. I've been in the industry for over 15 years, like just professionally programming. And then, you know, I programmed even in high school. But for you to have the skills to make the robot that you probably want, it really is not that hard. Is just putting in the time and effort to sort out the steep learning curve at the beginning. These stronger deterrents. Well, it would have been nice if we had had stronger deterrents before Russia invaded. It would have been nice if there was a point. There was a point where Zelensky was like, we can totally do this, but we need the money now. And both the Europe and the US kind of drug their feet on it. But like that time has passed. You needed to do it before Russia was able to entrench their positions. Or are we saying, is Donald Trump showing that he is a world leader? Well, that is actually the thing that is probably really in being contended here, right? The thing that everybody's arguing about in relation to Ukraine is whether they liked what Donald Trump did or didn't. But it's not over yet, so I don't think that we can really make a conclusion yet. You give it a month or two, and we see how it runs out, and then we'll see how the American public reacts to it. I think that they're going to come back and sign the deal, and in the end it will be, positive for Trump. But let's wait and see. I'm really bothered by this chart over here. I'm going to see if I can change something over here, and maybe this will fix it. So I loaded another chart. And it does not appear to have the same problem. So it was at 607 that it did it? So why is it that when I tell it to reload historical data that I get that? Yeah, we're pretty sure we should just capitulate to the fact that no matter what a Trump administration does, the default Democrat wouldn't be pleased. It's obviously not about what he does. It's about who's doing it. You can't negotiate that. Yeah. So here's the question. Here's one of the things that I would argue that goes much further though. Okay. You're ready for this? Okay. If Mitt Romney was president, they'd be doing the same thing to him. They'd be calling Mitt Romney a fascist and making a big deal out of everything that he does. See, everybody thinks that it's something unique to Donald Trump. It's not. The only thing that is unique to Donald Trump is that he is effective. And they would be flipping out about any Republican that was actually effective in office. Actually doing what the Republicans want. Right? They're okay if you put a Republican in there and he doesn't actually do anything and he continues to expand the bureaucracy and all of these sorts of things, right? The far left will still call him a fascist, but the Democrats in Congress, they'll just kind of, it's part of the game. But as soon as you put somebody in there that's actually going to do something, and it doesn't matter if it's Donald Trump or somebody else that has a more agreeable personality and everything else, they would still be flipping out. And the evidence that I would cite for that opinion is that they do this to every Republican that runs. And the only thing that's different now is that it's all weaponized by this constant cycle of mass hysteria created by social media. Okay. Oh, I forgot. Are we having some news here? Did I forget something? ISM manufacturing PMI, that's a big deal. 50.3 versus an expected 50.7. But prices paid 62.4 versus 56. Employment index 47.6 versus an expected 50.1. Oh, this is interesting. This is very interesting, guys. So even though prices paid was significantly higher than expected, the treasuries are still buying, presumably because you are seeing some real weakness in the employment. Wow, wow, wow. Hmm. Well, if I recreate the chart, and granted this is loading 15 days of data and this is only loading 3, but then the problems go away. So I'm just going to close this old chart and put this new one in. And see if that maybe fixes it somehow. Oh, no, I think that there are a lot of things that the left is upset about that Donald Trump has done. The problem is that they can't really be honest with us about what they're upset about because they are things that the American public largely likes. Like they like that Donald Trump has stopped illegal immigration. The American public. The American public wants illegal immigration to stop. The Democrat Party doesn't. The American public wants the deficit to be decreased. The Democrat Party really doesn't. The American public wants government to be smaller and more efficient. The Democrat Party doesn't. And if they admit that, they would lose moderates forever. They have to pretend that, oh yes, we want to reduce the deficit too. We just can't get rid of critical services. I tell you what, man, this ISM number being a buy is it just makes this market that much more interesting. No, don't you don't. Oh man. Have you heard from Ace much? Okay, so you maybe forgot about this story, maybe you weren't here for this, but there was a prop firm that went under, and when they went under, people leaked all of the conversations from their private Discord server for like the people running the company. And it wasn't very positive towards them. It basically was like, oh, we're just making money off of all of these stupid retail traders. And anytime that somebody was like really doing well, they were kind of looking for ways to like mess with them and screw them up. And so somebody did take that log and like put it where people could see, but they put it in their Discord. So, and it was Mighty Ox Trading. So I go over to Mighty Ox Trading and their Discord so that I could read those logs. Because at the time I was making the video about like why prop firms suck, right? And as soon as I joined the server, people like knew who I was and noticed that I joined. So I wasn't expecting to say anything, but like people started immediately talking to me. So we got into this whole thing. And the guy that runs that, who by the way, like hawks every single, he has like an affiliate link for like every single one of those things, and just he puts out a video every day, which is like to alert you of potential deals for these things. It's like he's really just trying to make money off of affiliate links for funded trader programs. It's like super, super crazy. And apparently Ace goes to this guy's channel now. And he didn't like me because of what he had heard from Ace. I kind of thought, well, you know, if Ace was here, I don't think that he would appreciate the way that this is going for his sake, but whatever. And anyways, they started asking me about how I trade. And so I explained it to them, you know, like using informational inefficiencies and everything. And when I explained it to them, they were like, that went way over my head and makes me feel stupid. And I'm like, well, that's just how I trade on it. It's not, I can't control how you react to it. And they banned me. So that's the story about it. So, and it really kind of, I felt validated how I felt about the whole thing, because the whole thing was like, I liked Ace. I thought he was a good friend, but I felt that he was just not, he was just not contributing to the channel, and that we were better off without him, because he either didn't understand or just didn't believe the approach that we were talking about with using empirical evidence and all of that. He still wanted to believe that he had some sort of system that worked, even though he like changed his system while he was here and everything, right? So that he went to, man, somebody that is just such a prop firm shill, basically, I felt was kind of validating. Like, oh, I'm glad that he's not here anymore. Not that I hold any animus towards him, but it's just, it's counterproductive to what we're trying to do, you know? So yeah, so he's still around. And supposedly if you go over to that channel, you might see him in chat. They don't have as many viewers as us usually, but they have pretty active chatters. So, man, I'm kind of sitting here and looking at this now and being like, maybe I should have tried to continue to go with it. But I was so I don't want to say perplexed or dismayed, but I guess just shocked that we got a move higher in the treasuries despite the final and the prices paid being higher. Oh, sorry, that's S&P manufacturing PMI. The S&P one was higher than expected. ISM was only slightly lower than expected. But the fact that we moved up despite prices paid being 62.4 is very surprising. Oh, see, Uzi says, oh, he is there. Yeah, and he is a mod. That's cool. But at the same time, I was kind of disappointed. I was like, of all the places you could choose to go, and this is where you went? Are you kidding me, man? I could not believe it. It's kind of gross over there. It is. I mean, they're thoroughly entrenched in the technical analysis stuff. They're thoroughly entrenched in the funded trader program stuff. It's pretty. Eesh. Where's Tilt? We banned Tilt. We banned Tilt. I banned Tilt. You're right, Uzi. It's all me. I am the sole decider of all such decisions, and nobody else has ever banned somebody from our communities. It's always been me. So one of those funny things that I see happen is, people assume that our community is just like every other community. So like when they come into Discord or they come into chat and they see blue names in chat, they think, oh, those are moderators and they have some degree of discretion involved in who sticks around, and maybe I should have some animus towards this particular moderator, or I should try impersonating this moderator to try and, start conversations with people. And that just doesn't work over here, because everybody knows that those guys are only there to handle spam, and I make all of the decisions. And why did I ban Tilt? Because he was trolling and distracting the stream. I did think that we had some, I kind of liked having him as fodder, if I'm honest. Like it gave good opportunities to explain the empirical evidence that we have and why it matters. So that was cool. But ultimately, that was somebody that I really didn't think was engaging in full faith. Right, he was actually here to try and steal viewers somehow, which is another bizarre thing. But partly, I think that our community is particularly immune to those sorts of things. But then the other thing is that I think that kind of tactic just doesn't work in general. So where are we at in relation to, well, okay, so 30-minute doesn't really do anything. You have to go to daily charts. Aha. Oh, interesting. Okay, so I wish I had noticed that. So that move pushed us above the 200-day moving average. So we might be seeing some CTAs shift and come in long in the treasuries now. And we're also now to the point where I think I'm up on my earlier position or whatever. I'm not quite sure. in my longer term position in the treasuries. Yeah, let's go and look at it. So I don't think that that necessarily means that like we just continue to like it's a trend day or anything. You might start to see some counterflows, but that might explain that it went even further than I expected, you know? But I was not paying attention, man. I did not realize that we had that news. So I think I screwed up big time today, really. Yeah, that puts me up almost 3% on it. Not bad. It's only $30, but it's not bad. Oh, that's weird. Dude, I am up on every position today. How is that? Isn't the S&P 500 down on the day? I guess it's up relative to the close yesterday, huh? Still. And it looks like rare element resources is up a good 7% today, probably on all of this talk about rare earth resources. So probably the larger rare earth minerals sector is probably up. I'm watching that one because really I want more. I for whatever reason I feel really attracted to and really strongly believe in this particular play, and I wanted to add more. I was thinking about adding more back in September. And that's when I lost my job. So that's super frustrating because I would be up almost 4x. Oh well. All I care about is a short on crude oil. That's a pretty good move. Although I'm not really seeing... Now, that's kind of a curious one, too. Because you're not really seeing the cumulative delta, and there's like these huge spikes, too. That's really bizarre. That's really bizarre. Yeah, the AT&T... You know what? Let me pull this back over here. Because I have to look at Intel. For some reason on TikTok, starting to get all these people asking me about individual stocks, and I'm kind of like suspicious about it. It's like, nobody's ever asked me about that before. I think you're baiting me. I don't really answer questions about specific stocks like that. But T has been still going. Whew. So when we were talking about, when we looked, I think the last time we picked this chart up, it was like at 24, right? We were saying, oh, it's about where Warren Buffett bought, right? So that's up. Now there's still this kind of hurdle to get over. That could provide significant resistance, but that run that they've had the past week is insane. That is an insane move, man. That is a really, really insane move. Okay, let's come back out. I want to look at Intel. Intel's another one that's been, apparently it's been popping off. Oh, okay. Well, so when it was over here, this was another one where I was like, maybe I should pick up Intel, but then it went, blah, blah, blah. Well, they've had a recent rise, but I think that Intel still has some headwinds. Like, those are going to be difficult for it to get back into the 30s. So, and I'm hearing all sorts of crazy stuff about Intel too that kind of makes me think, like, is the company really in such dire straits? I don't know. Okay, can you pull up? Yeah, so let's come back over here to the charts. So first of all, I'm kind of been having some issues with my chart, so I think that that's accurate, but it has the cost basis all the way back at 0.6 which is where there was a pretty good bump in the volume profile too on the way up. So that might be, for a pullback, might be a good target for a pullback. Really good. I mean, you see that shift in cumulative delta. That's a real shift in cumulative delta, right? In fact, it is. How much of a shift in cumulative delta is it? $17,000 to $40,000, so almost 25K change. Okay, it's pretty decent, but not crazy. Oil, again, so we're having this decline, and I'm not really seeing a significant change in cumulative delta on it. So why is that? I don't really know. If it was in treasuries, I might have a lot of theories for what could be driving the flows in that case. But in this instance, I'm just not seeing it. So when I see something move without a really big change in cumulative delta, I'm immediately thinking currency correlations, right? But like the dollar moved down. I don't know if that doesn't really seem to explain it. Well, actually, you know what? It could be, there was a little bit of like, do you see here in the treasuries? There was a little bit of buying before the move. And you can see that in oil as well. And then when the news came out, the treasuries moved and the oil moved. So I think that it could be moving in correlation with, treasuries in the S&P 500 and everything overall on a risk off play. But I'm still not sure if that completely explains it, just because I would expect there to be a bunch of selling in oil in that situation. So I can't really explain why there's a divergence between them. But again, the play is that when you see a divergence between them, when the price and cumulative delta are not highly correlated, then I avoid trading that instrument. So my news squawk just pointing out that there's a pretty big impulse in gold. I should also note that we're seeing pretty significant retracement in Bitcoin, dipping below 90K briefly there. Hey Gus, how are you? So I heard that Ukraine attacked a Russian refinery last day. Okay. Well, I haven't heard anything about that, but I'll keep an eye out for that. Trump chipmaker TSMC announcement to come at 1:30 p.m. Eastern time. Oh, that's good. To announce a $100 billion investment in the United States. Oh, is it going to be in Arizona, though? That's where they've been building, right? Bring it to Utah. Maybe. I don't know. So the issue in Utah is that, like, we got two major industries. Skiing and we have, like, a mini Silicon Valley here. So mini Silicon Valley is really hurting with the high interest rates. Really, really hurting. Don't forget the bees. No, we don't have that many bees here. The reason that the state mascot is a bee is because in the Book of Mormon, there is basically the Book of Mormon is these stories about people that immigrated from Europe to the United States long before like Columbus and all of them came over. Is basically what the Book of Mormon says. And one group of people that immigrated like after the Tower of Babel. And they built these ships that were kind of like submarines of sorts. Which is to say that like they could like be completely submerged, but they were still watertight, so no water would get in. And one of the things that it talks about them bringing with them was a beehive. And for some reason, some bizarre reason in the Book of Mormon, they say what the name of it was in that language. That it was Deseret, was a beehive. Kind of a weird, bizarre thing, but that is what it came from. And so that is why Mormons adopted the beehive as their mascot, because they are hardworking. But not because we have a lot of beehives. And you probably know that, and I'm being autistic, but whatever. I stopped using deltas. It seemed to get me out of good trades as often as it kept me in bad trades. Well, so the big problem with cumulative delta again is that people always look for divergences, right? Like the thing that I see that's the most common is people will wait for there to be a divergence in cumulative delta and then trade on the idea that they're going to come back to each other somehow, that one or the other is going to shift and then they'll be in line again. And the problem with that is that you don't know which side is going to shift. So when you say, hey, if there's not a strong correlation in it, then I'm just not going to touch it. It really keeps you out of bad action. I don't know if that's really the case here with oil, right? Because oil is like, it does have a good reason to move here. If that news point, if that data point really suggests the weakness in the employment market and that the Federal Reserve is going to have to accelerate, cutting interest rates and everything, you should probably see lower demand in oil as well. So there'd be a reason for them to sell. But why you're not actually seeing it come through in the form of delta is odd. Especially since there was like these huge spikes too. But I don't watch oil enough to really tell, I would say the other thing about it is that most people are trading ES and NQ. And while there are some things about order flow that you can utilize in equity indexes that can be useful, I think that they are a fundamentally different type of instrument, and you have to approach them differently in terms of order flow. And so especially this whole, I'm looking for a large meta order and, it's going to result in this trend and it's just going to keep going. You can't use that in ES and NQ as much. Because there's just too many different flows and hedging and things like that to really sort out why it's doing what it's doing. It seems to me that in the professional world, the only really major strategy that they utilize over there is market making and arbitrage. There's some people that will arbitrage the index and the futures diverging too much. And then, there's market making activities, broadly speaking, and, like the high frequency trading sorts of things. But then beyond that, I don't think, like over here in the treasuries, there's the basis trade and there's this trade and that, I think it's a different thing over in equity indexes. Did you even say thank you to Chicago? Wait, why would I say thank you to Chicago? Because they lost to us when was that? Thursday? You talking about them losing to us on Thursday? I don't know why you would bring up Chicago otherwise. Did you see that? I don't know if you guys are into hockey, but Chicago has is he the number 1 draft pick? I don't know. This kid is really good. Bedard, is that his name? And when he was playing against Utah on Thursday, so that's like a must-win game for Utah. Utah can lose 4 more games, and if they lose more than 4, then they're out of the playoff contention. So, anyways, so it was a really, really tough, hard-fought game, and Bedard made a really, really dumb penalty. And he was so upset when he was in the penalty box. And so everybody online is showing these pictures of him just looking absolutely depressed, as that he hates being in Chicago, when I think it was really more that he was mad at himself. But how often do you live stream? Every weekday starting at 8:30 Eastern time. My point is that Delta was more reliable, or if the condition that exists between Delta and crude was more of a one-off, I could deal with that, but it occurs regularly. Well, yeah, but that's the whole point, right? Why are we interested in when cumulative Delta and price are correlated? Because that indicates to us that the instrument is moving because of strong aggressive buying coming into that instrument itself. Whereas if they are not correlated, that suggests that it could be just regular random market making fluctuations. It could be a correlated asset, or it could be hedging flows, right? So that kind of allows us to filter out and both filter for the kind of move that we are really interested in, A, and B, try and understand why it is actually moving. So here in oil, my knee-jerk reaction would be, oh, well, they're responding to the PMI as well. But if they are responding to the PMI, why aren't you seeing selling come directly into the future in the form of market orders? Doesn't make sense. So for whatever reason, maybe the market makers are adjusting and it is moving because of that. But for whatever reason, the traders aren't really interested in actively holding the position in oil, right? And that might change how I deal with it, I guess if I had the short right now and I wasn't getting the change in cumulative delta, well, do I think that a change in cumulative delta is coming? Because if I still think that there's going to be a huge imbalance, then I would want to keep it open. But if it's not, then I just kind of consider myself lucky and take the profit, But can't I observe that simply by watching the tape? No. Well, I mean, not always. Because the issue is that there could be 5 or 6 different candidates, right? You see a move, but then you ask, why are we seeing that move happen? There might have been, and especially if it's not like it just all of a sudden moved, of course, then you just look for a news headline that hit at that time, and that's most likely cause for it, right? But if we come in on the day and I just see a broad trend in oil, like what's causing that? There could be multiple things that day that could be causing that. And whether or not the cumulative delta came along with that might help me eliminate some of those individual factors, right? If it's, things like tensions in the Middle East, or maybe they're trying to, judge the probability that there will be peace in Gaza or something like that. And that's one of my theories. Well, in that case, you would probably see people trading directly in the oil. So that theory doesn't really make sense, does it? But in this case, the move actually is coming in treasuries, and oil is just correlated to it. And so it is because of the PMIs. That's a reasonable theory, right? So that allows us to cross off some theories and maybe reorder some other theories and make those ones, the more likely answers. But more broadly, it really is the case, and I've done a pretty significant amount of backtesting on this, and there's a bunch of research about this, that the best, most consistent trends that you're going to see will be accompanied by a corresponding change in cumulative delta. Okay. I really think that if you're not getting the change in cumulative delta, that you have to consider that either it's coming later or maybe you want to take your profits early. I know, it looks like oil is starting to get a little bit of more selling in here. But it's still doing this, like, can you see here? It's this one down in the bottom. There is some selling, but it's being accompanied by a lot of buying on the flip side too, so it kind of looks to me like that there's a cross flow, that there probably is some selling in oil because they think that, like, the economy is weakening, but for some reason there are other people that also believe strongly in buying, and so those market orders are clashing into each other rather than like one side absorbing the other. So that's something that you can see with my indicators, but I don't have an indicator on oil to see that, but I can definitely see it in the tape, right? That there is relatively decent volume, but that the buying and selling are matching each other. In 6E chart, okay, so in the currency futures, you're going to see something completely different, because almost all of the flows that you see in the currency futures are hedging flows, right? Because the real volume in that market comes in the form of interbank trades. So it actually seems to me, when I was looking at it, I don't look at it very often, but every time that I've looked at cumulative delta on a currency future, they're anti-correlated. What do you got here? Oh, you sent you a private mail. All I see is the period. Unless you want me to comment on the stuff from the 24th. So we did get a little bit of a pullback in the treasuries, but they didn't make it all the way to our expected level at 07. Okay, do you have an indicator that will show the amount of trades per tick level? The amount of trades. So that's not one included in my package, but I have done things with that before. I didn't really find, I don't know, why would you want to look at that? If you were to start over again in your coding career, which sector would you choose? So I don't know. I wish that maybe I had gotten on the AI hype train earlier. You know, like I've been messing around with AI a lot and everything, but not enough that I was able to get a professional job with it, you know? So for me, I just regret taking that job. They came and they gave me a really strong offer, and you know, it was such a bump up in pay. How can you turn that down? But it was in an industry that I knew was having problems, and it wasn't really for a company that really cared about me. They basically, you know, what happened was I got hired by the product team. And then the product team was like, oh, we have some other things that we need to take care of, so we're actually going to pass you back over to DevOps. And then what was DevOps? DevOps already had their people that they had pulled in from, you know, like these guys had all worked with each other at a company previously and stuff. So what did they do? They wanted to protect their boys. And all they were doing was just adding more headcount to them when they were already bloated. So who's the first guy to go? Yeah. Right. So I regret taking that job. But there's no way I could have necessarily known. So many places are taking people with barely any, you know, but I haven't really seen very many machine learning ops jobs. Maybe I need to search for that a little bit harder. I don't know. Like more broadly, I had 2 interviews last week that were pretty serious, and then I got another one this week that's pretty serious. This one this week will be one of the harder ones, so we'll see how I do. But I was really hoping that I would have heard something on Friday. Not that they told me that I would hear something on Friday, but I do kind of feel like that I should have heard something by now. So who knows? Maybe there's already a message sitting in my inbox and I already have an offer and I'm just, you know, overthinking it. But until then, it's back into fill the pipeline back up. This last week I was like, I didn't have enough time, and this week I only have 2, so I can pick up a lot more. So maybe I will try to do some machine learning pipelines, because I've done a lot of stuff with it. It's just wasn't my position, and what I'm seeing right now is like, unless you like held the position before, they don't want to hire you. So I don't know. When I see a wide range candle that originates from a moving average, seems to be exhaustion. Yeah, I mean, so this comes back to like, I understand why you would think that, because retail traders broadly believe that, and there is behavior in what you see in markets where that stuff happens, right? But I can explain to you why why that doesn't work very well. So what causes something to move? Well, could be correlated market, could be hedging, but for the strongest moves, it is market orders coming in. So in a case where you're seeing really strong market orders coming in, what is going to determine how far it moves? What is going to determine how far it moves is the number of orders. And these buyers and these guys that are executing those are very price insensitive. So they don't care how far away from the moving average or anything like that is. All they care about is that their published strategy is that we hold this certain asset correlation and they execute it, right? And they don't care what the current prices are. So what ends up happening is, well, the reason why it seems like that it kind of gets stuck to a moving average is just because the further away from the moving average you get, that's a bigger move and there's going to be less of them, right? And that's why on a risk adjusted basis, it doesn't work. You go and you back test it and you trade the mean reversion on it. When you lose it, you lose so badly that it's just not worth it. So it doesn't, if you back test that, and it's very easily back testable, it just doesn't work. Why would a big player initiate offers at such an awful price? Because they are price insensitive. So for instance, maybe you're on the wrong side of it, right? Maybe you had a short and now it's going up, and so you have to buy to cover, right? Well, you're going to sit down and say, I'm not going to close my position because it's too high, and I think it's going to, I mean, you're like taking huge risks doing that, right? In a case like that, the professionals, they're just bailing. Or this guy that like they have to buy the end of the month. You know, like look at that move that happened in the S&P 500 going into the close on Friday for end of month flows, right? That's like super crazy up move. Why are they buying it at such a quote unquote terrible price? Because they don't care what the price is. They're price insensitive. They have to buy. They have to rebalance their portfolio, and that's like the rules. And so they're going to buy it regardless. I don't know, man. You can lead a fish to water, but was it doing a lot of oh, you know what? I didn't show you guys this. So, you know, I have all of these random strategies to show, okay, what would performance look like if it was just purely random, right? And I went and I made one. I kind of modified it a little bit. Which one am I doing? Is it this one, I think? Well, I don't know if showing it in here is really good, but I can show you the spreadsheets that it exported. But anyways, basically I did this thing where it's like, okay, I'm going to give you $10,000 to start with. So if the portfolio ever ends up under $10,000, then it stops trading after that, right? So we can see how many people blow up, right? So then we go and we take it and we say, let this random trade thing trade for a year. And at the end of a year, how many people are actually profitable? In other words, based purely on random chance, what are your chances of being a profitable trader over a year's time frame? And I did come in and do, let's do it in our studio. Came in and made distributions. And I also wanted to see, like, how does the survivorship of it work? Because basically that it's a question of like, how much data do you actually need to be able to tell that your gains are not just random? Well, it turns out that it's quite a bit. Why is that? Right? So you can see here. And let's make it big. So the blue is 1 year and the black is 5 years, right? So at 1 year, you can see if you kind of draw a line here, a line like this from the 0 line, right? Okay. So you can see 60% of traders are unprofitable. And this little bump right here is the people that blow out, right? These are the ones that they've lost, but they haven't blown out. These are the ones that blow out. Okay. And about 40% are profitable over here on this line. And there's only a small section that are like really, really profitable. Like they made more than 15K. Made more than what the drawdown was, that is to say. I wonder how much that is, actually. Let's come back and look at that. Now I guess I have to sort it. Sort by total net profit, largest to smallest. Okay, so only about 24 people doubled the account. Only about 24 people doubled the account. So maybe that would be one metric that would kind of tell you that, like, that's extremely unlikely. But anyways. No, remove the files I have saved what I need. Okay. But anyways, then you can see when you add more data, then you get the vast majority of traders have blown their accounts. But it actually turned out to be like 30% were still profitable. So that's pretty crazy, isn't it? Because the success rates that we get for retail traders in practice is like between 5 and 20%, maybe 30%, right? And 30% would be like over a 5-year time period. Now, one of it is this only takes one trade a day. So if you're taking like 3 to 5 trades a day, and then you would get to this like this 5-year distribution, right? And then 30% actually kind of makes sense that if most retail traders trading is random, it should be 30%. And if it's below 30%, then that suggests that there's something else going on, that like retail traders' strategy is like just objectively bad, right? Okay, when you buy something, do you consider the price of it before buying it? Not when I'm trading. Yeah, I understand why you think it works that way, but it just doesn't. Yeah. Imagine this, an institution that has 1,000 plus clients needs to say buy 10,000 shares now before the end of the week. Gotta hurry. A bit better price might be nice, but it doesn't matter as much. I simply need to buy or sell my 10,000 shares fast. That's what's important. So I buy or sell at whatever price is available until I have the full amount of 10,000 moved. Exactly. When I take a trade here in the treasuries, I do not sit down and think, well, it was here and then it was here, and so I don't think that this is a very good price. I will think about within the distribution and what I think the current conditions are. Am I at the higher or lower end of that distribution? And so there are certain prices I would like to get above or below. But it's not because I think like fundamentally this is a good price and this one is not a good price. All I'm thinking about is what are the future orders going to be? If the future orders are going to be an imbalance in favor of the buyers, then I'm going to buy. And if the future orders are going to be an imbalance in favor of the sellers, then I'm going to sell. And that's all there is to it. And I don't care what price it is. And in fact, some of the best trades that I've taken are going to be ones where it's already moved really far and I am betting on it continuing in a situation where it shouldn't continue, where everybody would say there should be mean reversion. It's gone too far, yada, yada, yada. And then it's a trend day and it just blows them out over and over and over again. What platform are you using? I use Jigsaw Day Trader. I have an affiliate link for that in the video description. And for the charts, I use NinjaTrader. And I have a NinjaTrader indicator package that I sell at speculatorsstuff.com. No. If they knew that in 15 minutes they can buy it cheaper, they would wait. But that's the thing, is that they don't know that. So this is where it comes to Almgren Chris, right? Because it used to be that they would say, all right, here's the VWAP, and are we above or below the VWAP? And if we're below the VWAP, if I'm buying and we're below the VWAP, then I can buy a little bit harder, right? And this was all kind of based on this kind of idea that, like, you know, when I'm getting a good price, I should try to take advantage of it, etc., right? And then what happened was these guys in 2000 named Almgren and Chris, they had a different idea. They said, what if we just try to minimize our impact on the book? So we don't want to ever trade so aggressively that the market makers flip out and stop providing liquidity and things like that, right? And so then what they started to do is you have like these time-based algorithms where they say, based on which direction I expect it to go, how much risk I'm willing to take on, and, you know, all of these kinds of factors, it creates a schedule. So if I expect the market to be neutral and I'm risk adverse, then the schedule looks like this, where you trade the most at the very beginning, and then each time that you trade each period, so it's actually like this, and then the next one will be half of that, and then the next one will be half of that, and then after that, you probably just trade the rest of it if it's really that big. And that's how these guys, that's how the really, really big players in the market tend to trade. Which is, by the way, why this kind of pattern is so common in the market. And you'll tend to see that this is bigger than this is bigger than this. It's because they're executing multiple legs like this. Okay, but so the reason mean reversion trades fail isn't because it doesn't revert. It always does. 100% they fail because they enter prior to the point where the price reverts. So first of all, that's not true. But then second of all, like, what time frame are you going to put on it, right? Like, if it has to revert before the end of the session, right? So if it's before the end of the session, then definitely you think you're going to see many of them fail. Because what tends to happen is they come in and they trade it like this, right? It has this impact. And then they stop trading and there's this short-term mean reversion thing. But, you know, it's only a little bit. Like, if you're expecting it to come all the way back down to here, or like to 50% or something like that, you're gonna be hanging for a long time. In order for it to like revert back to the price that it was before, somebody has to trade it there. Which might not happen. There has to be somebody willing to make that bet, to trade it the other way. Can you briefly explain what a liquidity hole is exactly? Sure. So a liquidity hole is a location in which market makers are less willing to put up liquidity at any one given time. So if I look at the offer, you know, and it's like always 100 contracts. So right now they're doing about 500. Okay, it bid up, they only put 263, 600. You know, if I see where it's like constantly below 500, then that's a really good sign that there's a liquidity hole there. Okay. And what happens is it stays there for so long that you can actually execute more volume in that spot than elsewhere. But they're not going to put up a lot of liquidity at once. And so what kind of results in is if somebody wants to buy it, you know, there's so much liquidity on there that it's hard to get over that. And so even if there is some strong buying, they kind of run into the wall and it comes back. And even if there's strong selling, it runs into the wall and comes back. And so price just kind of settles in the place where supply and demand are at their minimum, essentially. Why does it have to occur prior to the close? Because then you're not day trading anymore. I mean, now you're setting up something that is really flawed, because it is basically what happens is you're how far is it going to go the other way before it eventually closes the gap that you think it's going to close, right? Could be months. That's something with like a massive, you're talking about something that like, even if it really does happen a lot, you're talking about something with a tail, like, you know, off the screen. Have you looked into anything regarding the difference between normal order flow and market maker delta hedging? There are models that attempt to calculate what the market makers delta and gamma positionings are based on orders filled. These models are very, very similar to what I'm doing with the inventory cost basis. Okay. So it is very true that there can be locations where the gamma for the market makers flips because of what's already been filled in and everything else, right? But you just have to understand that that has a very limited predictive ability, right? Because what's ultimately matters the most is the future market orders that are going to come in. So, you know, you can have a situation where they come over there and yeah, maybe they are hedging, but there's some other flow that's coming in the other way and, you know, makes it not matter. Right? So that's why I always care about something that predicts the future market orders, essentially. Doesn't revert. Well, so then at what point are the qualifications that it's quote unquote reverting and you're going to take the trade? There is mean reversion on daily bars. See, this is why all discussions really have to be based on empirical evidence, right? Because otherwise you just start to make more and more confusing and complicated explanations up in your head. See, people think that, oh, we're logical, I'm thinking this through, but really what happens is you've already made a decision about something and we use the logic to try and justify ourselves. So you have this fundamental belief that price is mean reverting, and you don't really have any data to back it up. And then if I back test it, then there's going to be all sorts of excuses for why it doesn't work out that way. And unless you yourself are the type of person that's going to collect empirical evidence and goes and programs it up and everything, and you prove yourself wrong, you're never going to believe it. Even though I have all of this data and empirical evidence and everything to explain how the market really works, and what really matters, what we really know. Yeah, without data, it's really all a shot in the dark. I mean, it really doesn't, though. Not all price reverts. It's not true. It's not true. Okay, look, guys. Okay, here we had a move. It reverted a little bit. I don't know. Where is it supposed to revert back to? Back to here? I don't know. Let's just say for argument's sake that was the reversion that you're talking about. Okay. Cool. Look, we had another big move like that. Price needs to revert, right? Oh, it's still going up. And no, it's going to revert. I promise it's going to revert eventually. Oh, okay. Like it reverted, but guess what? Like, how long did that take? How do you know? Like, okay. You want to take this? When do you know that that's coming? Like, I just think the whole thing that you're trying to, it's silly because once you actually define rules for it, then you're going to find it doesn't work. The only reason you're able to believe that it does that is because you're not able to systematize it enough. Right. If I had pulled up market replay on NT like that, my app would have crashed 3 times before getting to that point. Oh, dude, Blizzard, by the way, I'm so glad. Because I totally forgot that thing that you sent me. Oh, man, because you did it last night. Let's see if that version works for me, huh? Okay, the 7 moving average and tell me that price. Okay, so if I put a 7 moving average on there, and then I use like MACD, right? Is that MACD to plot the difference between the moving average and the current price? Then you're going to find that it oscillates between 0 and 1. But you can't trade that because you don't know if the reason it's coming back is because the moving average moves up. Like, that's just like not understanding what a moving average is at that point. How should I do this? Yes, okay. Just overwrite. Oh, wait, it didn't. That was not right. Oh, I put it in custom, not indicators. There we go. Replace the file in the destination. Well, it's still not printing anything. Oh. No. It doesn't. Reload Ninja script. It doesn't print anything. Put everything into C++ library. Well, I don't know what I don't know if that would work. Like, the thing that's weird is that it's not even trying to, so I need to try and debug it. The challenge is, no, I mean, I don't think that you understand what mean reversion is. Like, so if we're in an uptrend and it goes like this, and then you have the moving average kind of comes up like this, and then eventually it comes up and touches it, right? And you're going to say that's the mean reversion? That's like such a ridiculous thing to say. That's just the reason the moving average moves up because it's just the average of the last 7 prices or whatever. So of course this moves up, but the fact that the moving average moves up doesn't make you any money because you don't get to trade the moving average. You have to trade the price. So you have to know when the price is coming back and that it's going to come back all the way to there. And how do you identify that? And that's not really, like, I wouldn't really necessarily call that mean reversion. Did you hit apply? Am I crazy? I know, right? It seems crazy that it doesn't print anything, that it doesn't like output anything. It's like, what? What is it? Is it actually doing anything? Because there is drawing code in there. Is it not even triggering the drawing code? But if I do that while I'm live here on stream, it will like mess up all my data collection. So I'd rather not mess with that. Actually, it's past 9/11. Okay, so let's do try to debug it then. I'm just going to move over to my develop workspace. Close back up. Yes, stop the strategy. Yes, save that. Okay. Oh, it didn't build. It just didn't build. Okay. Ah, no, your changes didn't make it compatible. I see. Yeah, it doesn't like, so you know what it is that you can't use a tuple. That's really the only major thing that you have to change. So like, yeah, I see here you have like this list, double price. I pull it up in one of these. You have like a new, new list of double price, double volume, like that. And this bit inside of the parentheses is a tuple. And that wasn't introduced until like C#6 or something like that. So you have to change it into something like make a new, the way that I had changed it was, the one that I sent you was, I had it like as a new list of, I don't even remember what I called it, peaks. New list of peaks or something like that. And I just went and made a really simple struct that contained two, yeah. So that's the main one that it's missing. What platform are you using? Primarily Jigsaw Day Trader for execution and NinjaTrader 8 for charts. One day my code will work on the first day. I have to say, Blizzard, what you sent me was one of the most sophisticated things that anybody has ever sent. We were doing all sorts of work, kind of like working towards doing a similar sort of thing to what you were doing. And I have the different kind of parts, and I've just never had the time and wherewithal to like put it all together and try to take trades from it. In part because I'm kind of worried about some of the issues that you're running into where like you set it all up and then the backtester doesn't work correctly. But I was really impressed with what you sent. And your idea on the volume profile is super, super interesting because I had kind of thought this thing like, oh, can you like tell when we're at a bump in the profile and say like take a trade when we're exiting the bump in the profile or something like that? And how would you go about doing that? And I don't know why it didn't occur to me to use some of these clustering algorithms for that. So I was really impressed with it. I really want to help you get it to work. And maybe maybe we can work together to get the server part working. So I had some code that was doing a similar thing, but I was using a socket. The socket should be quite a bit faster than a web service, but why over Thinkorswim would you recommend this more? So the major problem with Thinkorswim is that because it's a general broker, the tools and the commissions and the margins that you get for futures trading aren't very competitive compared to the futures specialty brokers. So like you're going to get a better deal with AMP, right? But the disadvantage with AMP is that you have to like buy the software, right? Well, the software that you get is better than what you get with Thinkorswim, but like you have to pay for it. So, you know, I own Jigsaw Day Trader. It's like $500 to buy and then $50 a month to execute. Costs money, but it gives me this great DOM that I can place orders on and shows me every order that's hitting the market in a really consolidated and efficient way. Can't beat that. Thinkorswim has a DOM. It's kind of okay, but it's just like not anywhere close to that. So I think it's time for me to get going. Tomorrow will probably be a better day for me to try and do programming stuff like that because my wife will be home. But today I think the kids are awake and I need to go and check on them. So I will do that. In the meantime, Blizzard, try again, or look at the one that I sent you, because the one that I sent you kind of dealt with those things. But the problem that I got was that then after I fixed it, it still just didn't do anything. So I needed to like put in some breakpoints and show like, is it even going into the draw method? Because like that's so weird. Yeah, thanks for the stream. Thank you guys very much. Make sure to go to the channel so that you're subscribed to the channel, watch the videos, like the videos. I would love to. I'm kind of in between jobs. You don't make enough money from day trading to live off of, unfortunately. It's not a very realistic thing. I do think that we have a valuable enough stuff here with our indicators and the YouTube platform that could supplement income, and then I'd be able to make better stuff for you guys. So if you want more good content, make sure you reward us for it. Otherwise, hopefully I get a new day job soon. So I'm running out of time. All right, guys. I will see you tomorrow. Stay excellent, team.